Welcome to Stories in Cyber, the ISACA New Jersey podcast. Founded in 1969, ISACA, which at the time stood for the Information Systems Audit and Control Association, has been a global force dedicated to advancing the realms of information governance, risk management, and cybersecurity. Here's the thing, ISACA is more than just a global organization. It's a global community, and we're not just a name. We're a network of like-minded professionals consisting of local chapters with tailored resources that empower individuals and businesses. So whether you're working for Chase Bank in Newark or work at Danske Bank in Denmark, you are not too far from the support and opportunities that ISACA chapters can provide. In this episode, we want to dive into what you can expect from Stories in Cyber and give you a glimpse into our podcast mission. We'll share our goals, introduce to you our fascinating guests, and provide a sneak peek at the topics we'll explore in the episodes to come. So with that said, let's get started. Hello, welcome back to Stories in Cyber. I am your host, Kerwyn Velasco, and I have here with me Ruchi Airon, an IT risk management professional working for BNY Mellon. Hey Ruchi, how are you doing?
Hi, Karen. How are you doing? So, hi,
I'm pretty
everybody.
good.
Hi, everybody. I'm Ruchi Airon, and as Karen mentioned, I work as a first-line technology controls management officer, or a first-line tech risk officer, if you want to generalize it, at Bank of New York Mellon. We manage the technology and information security risks for the lines of businesses that we are aligned with.
Wonderful, wonderful.
That's
So, Ruchi, this is not the first time I've met you. This isn't the first time I interface with you. I think our audience would love to know a little bit about you and how you get started with talking with me and talking with ISACA.
sure. Actually, I met Kerwin as part of uh, being a board member of NJ ISACA from 2022 to 23. He and I worked together as part of the board, and we worked on a few of the initiatives together, especially when I was chairing the She Leads Tech committee for NJ ISACA, which basically is, She Leads Tech is a committee which was created as part of One in Tech initiative by ISACA, and it was created to provide support through community network engagement, as well as to provide, vision through a variety of leadership development, technology education, and mentoring opportunities for women at all levels of their careers. So as part of that, Kerwin and I actually worked together in a couple of events supporting women in technology, with one around navigating and leading corporate world as a woman, and another event around risk controls and audit management and how they are great career paths for females and individuals who are IT leaders.
That's wonderful, yeah. And you did such a great job leading all those efforts. And I am so glad to have you back and interfacing with you. I think the focus of our episode here is actually be a lot about your professional life, not about ISACA specifically. And so you mentioned you work for BNY Mellon. You've worked for several places, all within the banking and financial services field. I would love for you to tell me more about your most recent role as an IT risk management professional.
Of course. Let me just give a little bit of background before I come to my most recent role, because there's a pathway to it
Of
and there's
course.
a story to it. I started my career actually in IT audit as an intern with Lehman Brothers. I did that job. That's when I figured out, oh, I do have a knack for, understanding what risks and controls are. That's where it started, and it delved into another organization where I worked as what you call as a hybrid auditor, both ITGC as well as business or ops audit. Did that for a few years and really enjoyed it. But then I thought I want to focus a little bit more on the technology risk, and that's when I moved to a bank called Credit Suisse. Hopefully everybody's heard of it. I worked in their IT audit department for about 5 years or so before internally moving to their second line technology risk role, which I did for about 3 years before I moved on to Prudential, in their second line technology risk role. And from there, in about 3 years or so, or 2 years or so, I moved on to where I am currently at Bank of New York Mellon, first line technology risk role. So there's a reason why I gave that history. I started my career in a third line role, that's audit, moved on to second line role, that's the partnership role in technology risk, then moved on to a first line technology risk role. So I've worked in all three lines of defense models in the industry, in the banking and financial industry as a whole.
Yeah, and just a quick reference, we actually had a great podcast I guess the last podcast was all about the lines of defense. I'll also link the podcast here so you guys can go back and read up on lines of defense. But I think it's very interesting, your background, where like you jumped around the lines of defense, and the fact is that in all the places you worked, there are different flavors of risk management. And I know for me personally, like I'm very familiar with the IT and enterprise risk
Yep.
management, but
Yep.
there's also operational risk management, and there's also different flavors in the schools of thought. I wonder if you could expand on like what those are and what the differences are between all of them.
Yes, I can obviously. So there are different levels of risk management, and there are a lot of acronyms that are thrown around in the risk management space. A lot of us call it barriers to entry, right? If you think through it in the career, but there are various schools of thoughts around how the risk management concepts and frameworks are structured. But I'm going to speak a little bit more around, from my experience in the financial and the banking industry specifically, how they are generally structured and what my experience has been. So at the top, what we call is ERM, you'll hear a lot about it, is enterprise risk management. It's basically what the name suggests. It's a more holistic view of risk management across the board for an organization. So it could include designing and maintaining the enterprise risk management framework and policies. This is where the framework and the policies are defined for the enterprise as far as risk management is concerned for the entire organization being the keyword. This is where we drive continuous insightful risk identification, proactively looking where the various methods to identify risks at the organization, establish, measure, and monitor the risk appetite, which basically means how much of a risk can we take in a very generalized manner, just to explain it a little bit, and then deliver risk metrics and reporting, which are highly transparent as well. How do we measure basically where we are from a risk perspective? So that's an overarching, very high level view of what enterprise risk management's basics are and what the definition of enterprise risk management or ERM is. You'll also hear an acronym called ORM, or what it corresponds to is operational risk management. So how does that tie to the ERM, enterprise risk management? Within enterprise risk management, there are various other risks that are broken down. It could be, your legal and compliance risk. It could be your, bank's reputational risk. It could be a lot of other types of risks. Within that, also, there's what you call as an operational risk, which is a subset, which is basically the risk of operating the business, which is a subset of ERM. That is what we hear a lot about. Another one that gets thrown around a lot is technology risk management, how that factors into operational risk management. Different schools of thoughts there. Some organizations keep operational risk management and technology risk management separate. A lot of organizations keep them combined as as one basic unit, and a lot of organizations treat technology risk management as a subset of operational risk management, which means that of all the operational risks that are out there, technology and information security risk is one of them. So that's basically how you can differentiate between various parts of them. One is a subset of the other, and it's a subset of the third one.
Yeah, so like it seems to me like again, the entity level, the high list level, enterprise risk. Sometimes all of it flows in operational IT to the enterprise risk level, and sometimes it's flat, and all of them are possibly the same. All right, how do you manage? I guess either maintaining for your organizations you've worked for I guess the different types of risks, because like I feel like some people get confused and they say like, oh, we're just having basically a risk register, right? And it's essentially just a findings register of like 1,000 vulnerabilities.
Right.
I'm like, no, that's not what I'm going for here. So do you like have you had this problem where trying to handle volume and trying to communicate like we need this to be at a high level for a layman to understand rather than the specifics of an IT person understanding it, right?
Always, we have to always realize that we work for our clients, right? All of us is actually one of our biggest stakeholder. It's actually the stakeholder for us is our client, right?
Yeah.
They do not want to get into the detail of, hey, technology risk, hey, ops risk, hey, what's the difference? They want to see the overall picture and consolidated picture. And all depends on the company or the organization's maturity model as far as their risk management framework establishment is concerned. The ones that are a lot more mature will have an overarching risk, level one risk, as you can call it, which kind of gives you a roll up of everything and it'll give you a picture of where you stand as far as residual risk is concerned for your organization or for your business unit or line of business or however you want to call it at that level. The ones that are not as mature will have risk roll up to not at that high level, but maybe at the for example, at the credit risk level, this is what you look like. At market risk level, this is how you look like. At IT risk level, this is how you look like. And then there's a manual consolidation effort around that. So depending on the maturity model of the organization, it will differ on what has been implemented as far as risk management is concerned. But from the basic standpoint, risk register is where it begins, right? How would you even know what to risk manage if you don't know what your elements of risk management are? So yeah.
Yeah. So have you seen a very big difference when it comes, because you primarily lived in the financial or the banking world, the differences between those different types of entities when it comes to management of risk, identification of risk, or even reporting of risk? What have you seen are the big differences between the different types of finance versus banking in general?
So they are obviously banking industry is very nuanced and very multifaceted, and requires comprehensive frameworks and strategies to manage the various diverse risks that we have in the banking industry that is different from other industries. For example, a couple of them being banking industry being highly regulated as compared to, for example, retail industry, for example, not as highly regulated. We have the Federal Reserve in U.S., which keeps a very close oversight over banks. FINRA, as a committee that keeps an eye over and has their requirements of what the banks have to maintain as far as minimum set of requirements are concerned. So very highly regulated. As a result, risk management is also a function that is required to be maintained. Obviously, to make sure that the organizations are delivering and delivering to the best of their capabilities for the interest of their clients as part of their fiduciary responsibilities. Another aspect of that is, the complex products and services that banks offer versus other industries that makes it very complex to do risk management in this space. It also has unique financial, requirements as well, and it's unique financial risks as well, which other industries may not have, including, credit risk, including liquidity risk that we have to maintain. Also, maintaining certain amount of reserves or certain amount of, sort of savings, if you want to call it, like saving in your savings account, very similar to that, that are required for a bank to maintain to even function on a day-to-day basis. There are obviously a lot more data security requirements for a bank versus some other industries that are out there. Obviously, that's getting tightened for sure in other industries at this point, but the banks have been scrutinized for that for decades at this point, and on how the data is being maintained and how it's secured in this space. So that automatically makes it a lot more, nuanced and very comprehensive from a risk management framework perspective.
Now, is it because, like, I guess the whole that banks and the impact that banks have to our economy, that's the reason for the major scrutiny? Like, is that what you feel is the driving
So,
factor for that?
yes, so banks are considered systemically important to the health of the to the health of the a country's economy, actually, not just the financial system itself. So if a bank fails, we've seen that in the past of our experiences where banks have failed, how it affects the economy as a whole, not just the country and the impact it could have to the global economy as well. So the systemic um, stability that a good risk management practice brings to a bank and then to the industry and to the country's economy and to the global economy is very impactful, and that's a nuance that is not present in or is generally not present in other industries as well.
I know I do a little tangent before we go into other, I guess, areas about yourself as a person. Asking about risk management, how much is, I guess, other domains informing the ERM, operational risk, technology risk domains? Like, for instance, very high in people's minds are maybe like recently socioeconomic, political, external factors that might affect an organization's risk, especially because of changes in politics might influence laws and regulations applied to banks and the financial services industry. How has other, I guess, factors, and including like environmental and that kind of stuff, how much is that affecting your personal practice of ERM or any other
So,
practices?
a good risk management practice always has external factors that impact the economy, that could impact the potential bank, that could impact any potential risks to the bank as part of it, embedded into it. We call it emerging risks at times as well, depending on the organization it is. It's part of the good banking practice as well to always cater for external factors that could impact the risks of an organization. And, if it's something that is a little more near in the future to factor for it in your risk ratings as well in the space. Right, one of the biggest examples is pandemic, right?
Yeah.
When the pandemic hit, it's an external factor that a bank cannot control or cannot influence, but the banks had to provide for it. Even if from a technology risk perspective, you think through it, a lot of banks and a lot of companies, but banks especially, within a couple of days were able to stand up infrastructure. Within a couple of days, a week or so, when the lockdown started.
Yeah,
So
and
just want to make sure that, yeah.
I'm sure they had like different standard procedures that go along with that, and they probably are more better prepared. I feel because of the level of scrutiny that they're given compared to other industries, right? Like I feel
Of course,
like a
yes.
week. Anyway,
There are a lot of tabletops that are done in a bank. Normally, some are required by the regulators as well, but some are proactive as well that are done just for account for situations like these where external factors could impact the functions, the operations of a bank.
yeah, yeah. So considering external factors, right? Something that might be external for an individual person might be dependency of other people, like children, right? So that's something that me
Yeah.
and you have shared in common amongst all of other people in our membership and even people listening. You are a parent like I am, right? So tell me a little bit about the way you feel like being a parent has changed the way you worked, because you said like, oh, pandemic changed how I work. Now that I'm a parent, how did that change how you work?
I think being a parent flips your mindset to a 180 degree for sure when it comes to risk management.
Yeah.
You really, really, really understand how to manage risk really well, really quickly.
Yeah.
And account for any factors. I think it just makes you a better risk manager, if nothing else, being a parent. For example, if you think through it, right, you hear a scream out of the blue.
Yeah.
You run towards the scream because that's what a parent normally does when they suddenly hear a child, a 6-year-old in my case, scream out of the blue, and you run and you factor out immediately within that, hey, what is it? What's the so what of this, right? Okay, she's screaming. So what? Is there a cut? Is there something that she bleeding? Is she just like, screaming for attention? What's going on? So get your inherent risk going. Immediately you put you do the assessment of the control environment immediately in your head. It's, whether my controls were designed effectively or are operating effectively or not. You come up with your residual risk in this point, and then you put in the mitigating factors and immediately, right?
Yeah.
Okay, they need a band-aid as the mitigating factor. If they need a stitch, then you run to the emergency room. That's your mitigating factor. Depending on that, you either accept the risk, it's just a scratch, it's okay, they're going to be fine, and you accept the risk of them crying for another 5 minutes and then give them a hug and they calm down. And then also in future, it'll also help you create a risk register in your head to put in more preventative controls, to put gates on the stairs so that they don't fall off anymore, and then more detected controls, just like the other sibling jumping in and helping and providing background information on what happened. So there you go. I think just giving that example of being a parent especially makes, of course, you draw on your home life into your work life, and you apply vice versa. You're bringing your whole stuff to work, right? And you're also bringing your whole stuff to home.
Yeah.
So you apply what you do at work at home, and you apply what you do at home to work as well.
Oh man, yeah. I feel like you get so much better at doing a risk assessment. Basically communicating that risk to the people around you better because you're a parent, right? Like, so, like you do all that, like you said, that whole scenario of a child screaming, you run to them. It's like, okay, I'm gonna be able to crunch all these inputs and outputs so fast to understand what's going on
in a very calm manner, because if you lose your calmness there, the child is going to also lose the calm there, right? It also teaches you to be, calm in very stressful situations, to keep your composure in there and not, lose it. Because if you do, the child is going to be 10 times worse than you are.
That's amazing. And, you have, you said 2 kids or 3 kids? How many do you have?
Yes, I have 2 kids. I have a 9-year-old and a 6-year-old.
Yeah. So, obviously, you've experienced a lot. You're no longer in the slug phase or the infant phase. You're now going toward the adolescent and then teenage phase. So there's additional emerging risks on your horizon. I feel, Ruchi. So
yes, there are emerging risks in this space, and some of them have already started showing up a little bit as well. So there you go, right? You always get the indicators of those before it actually happens.
Look at those OKRs.
But we are tackling it with preventative controls. We are reading up on things and behaviors, and how different changes are to be expected in your behavior, in your body, etc. So there you go. We are putting preventative controls in already.
Wow.
But we are available with our detective and compensating controls as well, as and when needed.
All right, Ruchi, it's been really great talking to you. I just want to end on this final note. What is a bit of advice you would give to risk managers with kids?
Listen to your kids. They are your stakeholders at home, if you think through it, right? They are your stakeholders. Them not being protected is your biggest risk. And you have to listen to them as a result of that. When you listen to them, that's when you will develop what's the best course of action, learn from them from a risk management perspective, how you deal with their problems is basically active risk management that you're doing at home on a day-to-day, hour-by-hour, minute-by-minute basis. How you prioritize between various needs of your children is how risk management is done too. The so what question that you ask your children, the how bad is it question that you ask your children is how you do risk management in real life as well. So please make sure that you listen to your children and you transfer your lessons learned to your work as well for success.
Awesome. Thank you so much, Ruchi. It was a pleasure talking with you again.
Same here, Kerwyn. Lovely meeting you again.
All right. Thank you, everyone. We'll see you next time on Stories of Cyber.